combined economies of the GCC acting as a single market could become the world's sixth largest by 2030, according to a new report. According to Ernst & Young's latest growth drivers report, the GCC as one single market is the ninth largest economy in the world today, similar in size to Canada and Russia. The report said that if it is able to keep growing at an annual average of 3.2% for the next 15 years, it could become the sixth largest economy, just below Japan. The analysis also illustrated that removing obstacles to trade and investment would boost the GCC GDP by 3.4% or $36 billion, with 96% of its gain coming from the removal of bureaucratic barriers to efficiency. It said the benefits would be spread across all six economies, with the strongest gains in the UAE, Saudi Arabia, Bahrain and Oman, with increase in GDP between 3.5 and 4.1%. According to EY, a fully functioning single market would reduce overall trade costs in the GCC, boost productivity and encourage higher levels of intra-regional trade. Arabian Gulf banks may struggle to maintain profit growth rates of previous years, according to the Boston Consulting Group, as lower oil prices affect regional economic growth. In a study unveiled on Monday, the group said its BCG banking index of 45 banks in the region grew 6.3% last year, compared to 14.7% in 2014, as the more than 60% drop in oil over the past 2 years finally took its toll on the banking industry. Officials from BCG said the interest rates for bank customers may rise as governments pull money out of lenders to plug deficits created by lower revenues from the sale of oil, pushing the available cash supply available for lending lower. The economic conditions has also made it difficult for many small and medium-sized enterprises to service debt. The chairman of the UAE's Banking Federation warned in November that a small number of business owners might have fled the country, leaving unsettled debts of about 5 billion dirhams. Gulf Finance, the Dubai specialty SME financier, also has shed light on the situation in a report showing that confidence among SMEs slips to new lows in the fourth quarter of last year, when the fall in the price of oil was most fierce. The UAE is the fourth biggest exporter of crude oil in the world, and the federal government relies on sales of oils to fund more than 65% of its budget. Separately, the UAE Central Bank said yesterday that lending growth in the country rose at an annualized 7.9% in February. In January, lending grew by 7.4%. And Muslims spent an estimated $244 billion in 2015 on apparel globally, according to a new report published by Salam Gateway. The report identified over 1,000 OIC-based manufacturers of apparel, 146 key modest fashion brands, and 85 e-commerce retailers. Modest fashion represents a key sub-segment of Muslim spending on clothing, underpinned by Islamic religious obligations with requirements for both men and women. The report shows that female spending represents a larger market opportunity, accounting for 2/3 of global apparel spending. There are substantial opportunities for growth in the modest fashion industry, and this has been recognised by more than 25 mainstream companies that recently entered this market, including brands such as Dolce & Gabbana, DKNY, H&M and John Lewis. The report added that mainstream fashion has become fairly saturated, while modest fashion is turning into the mainstream. According to the report, fund managers have spotted several opportunities and are already invested in emerging players.